What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well. And yeah, we've got a massive week ahead of us. We've got interest rate announcements I didn't even realize. We've got PPI and we also have CPI. So another crazy week to look forward to. Again, very low probability. Going to be very interesting. You'll see that dollar went exactly the opposite direction which I anticipated. Absolutely fine. I am going to start on the monthly just because there's a few things I want to bring our attention to. So you can see that we obviously had this down month in May, and now we're starting to move into June, and you can see how we started the month trading up higher. Now, if you've been watching my videos, you'll know that I've been wanting to see lower dollar, as in, seeing us reach down into this range, and that is still possible, especially with the news we have this week. And yeah, I don't really want to take my eyes off that. But before I get into it all, I do want to bring our attention to this level right here, because ICT did state in his videos quite a long time ago that he wants to see dollar reach up into these levels. And the fact that we turned around right here in this bearish order block, that's what changed my mind against that bias into thinking that we're going to have lower dollar. Now, obviously we still can. You can see we're just staying in the consolidation, and the fact that we're back inside of this consolidation, and you'll see on the weekly, is the reason why I didn't want to see dollar trade higher, because if we traded lower, it would have almost taken us out of that consolidation, and I just can't be asked to be stuck in a consolidation, because you know how the markets can be. But other than that, let's mark out some premium PDRAs on the monthly, such as this rejection block level right here. We'll put monthly rejection block, like so. I haven't been in the charts in like 4 days, guys, so it feels nice and fresh, to be honest. Monthly rejection block levels right there, and then in terms of sell side targets, I'd be looking at this low and this implied fair value gap down here. So we can put monthly sell side liquidity, and we'll put that to the right, and we can just thicken that up. So now we have two sides of the market and pretty much our trading range between this high and this low. So what might also be useful for us is to mark out the midpoint of the range, and the reason for that is because one, price always tends to return to equilibrium, and two, we can watch equilibrium to potentially provide support for price. So we might be able to use this to key off to potentially form some setups. So I'm going to put monthly equilibrium, because that's our monthly equilibrium of the range. And just because we're here, I may as well get the 25 and 75% levels marked out as well. So let's do that. We'll make these ones blue. I'll put 75%. And then we'll drop one down here for 25% as well. But yeah, this video is likely going to be quite long, guys. So do sit back, relax, take your time, enjoy, learn. Definitely not going to be rushing this video, just because, like I said, I haven't been in the charts for like 4 days, and this is pretty much my first time sitting down in them in those 4 days. So I'm going to be seeing things live as I'm recording this, so it'll be quite interesting. So now we can get rid of the range. So we have the monthly rejection block level and these highs. You know what, let's just mark out the highs, just because it'll make it easier for us. Got the 75% level, 25% level, monthly equilibrium, and we'll put that centered, 25% level on the low. So let's now go to the weekly, sorry, and you'll see how we've come down, traded into this rejection block level, and this acted as rejection block quite well. And what do I mean by that? Well, as soon as we traded into this range, we got rejected here, and then last week with all the craziness, we came down, accumulated more sell stops, failing to take out this low, showing a level of bullishness, and then obviously closing higher with the expectation to move trade higher into this range. So what would our next targets be? Well, obviously this 50% level, which you can see we're already trading quite aggressively towards, but then we have this nice range right here. Now obviously there's no clear fair value gaps on this time frame. There is an implied fair value gap up here though at the 75% level, so let's get that marked out. And what you'll find is also coupled with a weekly bearish order block as well. So what I'm going to do is I'm going to get rid of that. I'm going to make this blue because we haven't traded to it yet, and this can be a weekly buy side target or draw on liquidity as an implied fair value gap. and we need to make sure that we define it as a weekly implied fair value gap, like so. And then we also have a bearish order block on the weekly as well. That price may want to key off, so we can put weekly bearish order block, like so. So now we have premium PDA ratio trade to, obviously this high as well. This is a rejection block level as well, but I don't want to talk too much on them just because they are difficult to understand, and even I to this day am still figuring them out. So in terms of premium PDAs, it will definitely be this weekly implied fair value gap to trade up to. And if we do take out this high moving into this week, which I think we very likely will, then this will now become a bullish order block. So we can look at the open of that as a bullish order block open. On the lower time frame, we'll probably be able to see it better. So we'll get that marked out like so. And I'm going to put potential weekly bullish order block, because it's technically, since we haven't taken out the high off that candle yet, we shouldn't really define it as an order block. But until that happens, we know that once that does happen, we're inside an order block, and if we ever come back down to this range, we can anticipate it providing support for price. So what else is there for us to look at? There is also an implied or inversion fair value gap right here, and I'll show you what I mean. So if we look at this range right here, and I'm going to make this a different color for us, I'll make it red. You'll see how we traded on the downside, and then we've now closed above it on the upside. So moving into this week, if price pulls back into this range, I'd like to see, can this provide support? Because I'd like to think this could make, if we're going to continue bullish and we are going to have an up close candle, and I am looking for an up close candle this week, if we pull back into this range, I'd expect to find buying opportunities for potential longs to run up into above that 50% level. So I'm looking for this to act as support basically, and I'm going to call this an implied bullish inversion fair value gap. Very confused in terminology, but if you've been watching my videos, you'll know exactly what that means. Or if you're not sure, do drop a comment below or join the Discord. So yeah, I'm expecting to draw up here. We've got a nice swing high on the weekly up here. I'm not going to bother mark this one out just because we're so close to it, and it's not really a draw for the daily yet. So let's just get this marked out as buy side liquidity. Also guys, if you haven't yet, do join the mailing list. I know I've been saying I'm releasing content soon. I've just been extremely busy, but I do have a lot of you on there already. So as soon as it's all ready, I'll be happy to send it all around. We've got weekly buy side liquidity there. And yeah, so I'm looking for this level to act as support, and obviously this bullish order block, potential bullish order block, to provide support as well. If we trade through this and start running lower, I'd be looking at the 50% level of this long wick right here. But I'm not going to bother worry about that as of yet, just because it's still Sunday, and I'd rather let Monday and Tuesday play out first. So I'm not really too concerned about the sell side. If anything, I'd like to think that we'll see quite a lot of strength around here, or we'll see just a run up into that buy side liquidity. But let's jump to the daily now, and you'll see how we had our large expansion with non-farm payroll. This is now a bullish order block right here as well, which lines up pretty nicely with this potential weekly bullish order block. So again, as price pulls back into this range, we should anticipate it being able to provide us support. What you'll also find is that potential weekly bullish order block lines up with this as well. So if we do find that price bounces off this, that will be what we call a reclaimed bullish order block, and we can talk more on that later on in the week. But for now, I'm watching this here. Obviously we have a range here, but obviously we still got the daily range to form. But if we do have a classic week, then obviously I'd want to see Monday, Tuesday create the low, whether that's in this implied fair value gap or in this range in general. And then I'd like to think that we can trade on higher into our weekly buy side liquidity target, and then start thinking about that implied weekly implied fair value gap up here as well. But yeah, it should be quite an interesting week. Let's go on the 4 hour. And you'll see our price is just rallying. These are relative equal highs here, all along here are relative equal highs. So I'm not surprised that price is reaching for them right now. As we do move into the London session, I would like to think that they leave this weekly buy side liquidity intact. So what do I mean by that? So on Monday morning, Monday London session, if this buy side liquidity doesn't get taken out, then we'll probably have a nice reversal to come lower and start thinking about making those lows in the implied fair value gap or in this range right here as well. So I'll be watching that very carefully. If that high does get taken, however, then a retracement that deep probably won't happen until later in the week. Again, this is why we have to wait. There's only so much we can look at on Sunday. But based off that, we should be able to figure out, okay, are we going to have like a crazy reversal on Thursday or Friday like we did last week? Or is it going to be more classic in terms of creating a low on Tuesday, maybe Wednesday, and then trading on higher? Now, one thing I do want to check just real quick, did we take out? Okay, so this is a, what do you call it, mitigation block, because we've got a low, a high, a higher low, and price is obviously broken to the upside. So price doesn't need to come all the way back down to this level. But you can see there's consolidation around here, so this is where they're likely going to be wanting to reaccumulate. So this is the lowest time frame I'm going to go to, purely because it's Sunday. As you know, that's how I usually trade, how I usually work my way around price. But Mondays after non-farm payroll do tend to be quite aggressive. So as much as I'd want to think that they'd try and create a low, it would not surprise me at all if Monday did just carry on rallying. If Monday did just carry on rallying. So we very well could see prices carry on rallying right into that buy side liquidity, and potentially even take out these highs and reach our, our weekly implied fair value gap. Ideally, it doesn't go all that way. Ideally, I'd like to think that this bearish order block up here could, stop price to an extent. But it wouldn't surprise me if we just saw, London open and us just continue rallying, and we might be able to get on some nice moves if that is the case. And then, like I said, it might be like a late Monday or early Tuesday reversal lower. So just be careful, be wary. But generally speaking, we should be expecting some kind of rallying to happen in the early hours of the week, like the very early hours. So London session, maybe New York, and then a reversal maybe around Tuesday morning or late New York. So that's what I'm looking at. But overall, for a weekly outlook, because this is a weekly video, I'd like to think that we can create the lower down here, and then we can expand higher into our weekly bearish order block all the way up here. So very big week. Again, interest rates will move price. PPI will move price. And it'll be very interesting, to say the least. So yeah, that's everything for me there. Let's take a look at GBP USD. We are going to start on the monthly here as well. Bearing in mind, guys, I haven't looked at the chart since Thursday, so do be patient with me. But you can see how we traded up into this large wick. And you can see our volume is respecting that 50% level. So we've obviously started in June. We've taken out a high already, a monthly high. So that's a significant high that's been swept. And obviously, if we're expecting higher dollar, then we should start looking for bearish PDRAs for pound to be trading towards. So what do we have? Well, we have this very obvious bullish order block open right here. So let's get that marked out right now. We've got monthly bullish order block. We'll center that. Make that black. So this is the sell side target for price to want to trade down into, and right now I'm just going to keep that as my only target for price on the sell side. When we drop down to the lower time frame, obviously we'll be able to get a better look, and then obviously we've just taken out this buy side liquidity. So what I'm going to do is I'm going to just grey this out, but I do want it marked just so I can see the level which we took out, because like I said, if price retraces back up into that premium, it should find resistance to help send price lower. Let's go to the weekly, and you can see that high we took out, relative equal highs, nice down close week. The highest, again, if we're expecting a down close week, the very highest I want to see price trade is going to be the midpoint of this wick right here. Now you can see the 25% level lines up with the buy side liquidity. What a coincidence. But I will be looking at the midpoint of this wick right here to provide resistance for any kind of premium. So again, when the high is getting made for the week, are we watching this level to be where the high is made, or like where we find resistance? So let's get weekly consequent encroachment marked out, as that's what it is. And remember, that's the very highest I want to see price trade for me to be happily bearish on pound. If we get above it and we start finding support, whole other story, and I'll be looking at these levels right here. But for now, as I'm looking at the markets, I'm looking at this 50% level as the very highest. If we're extremely bearish on pound, you'll find that we only trade to the 25% level. But I'm not going to talk about that. Actually, we'll get it marked out just so that we can see it. Let's see. We'll get it marked out just so that we can see it. However, and then obviously if there's PDRAs that line up with it on the lower time frames, that might be a nice target for us. So we have the midpoint and we have the 25% level. And then obviously in terms of targets, very, very obvious target right here. We've got the monthly bullish order block, but we also have this huge fair value gap. And like I said, Mondays after non-farm payroll go crazy, so we might very well see Monday just trade slightly up and then sell off for the rest of the day, and I wouldn't be surprised if it started digging deep into this fair value gap. So that's just something to consider. Let's put weekly fair value gap. Whether we fill it or not, that's another story, but I know that 50% level at least is where I'd want to see price try and reach for. So we have that marked out. And then obviously all of these lows are going to hold sell side liquidity. So let's now go to the daily, and you'll see clear displacement. We have a breaker, high, low, high, broke lower. Now this, what we should be looking at now is technically this level right here to be shortened from. So what I'm going to do is I'm going to draw out this entire range, and then on the 4 hour or even the 1 hour, we might be able to find a nice setup, because like I said, if Monday is going to run crazy, any kind of premium we see maybe get made in London or the early hours, we should be thinking about shorting opportunities to potentially send price right down into that weekly fair value gap below these lows and to fill this gap right here. So when you see how fair value gaps layer each other, like what I'm showing you here, so we have a daily fair value gap within a weekly fair value gap, it really helps with precision on where price is likely drawing to. So I'm going to just have this marked out as well. I'm going to take the midpoint out just so it's a bit more clear. So now we have a nice clear draw, a daily draw on where we want to see price potentially move to. Now, if price moves to this again, if it does this all in Monday, tomorrow's going to be like another weekly review, and we just sit back and figure out, okay, we've done that, what next? But generally speaking, I'm looking for shorting opportunities in here. I want to see it provide resistance. These two up close candles are bearish order block, so it should provide resistance. Midpoint happens to line up with the low of the bearish order block, can't make that stuff up, and then relatively equal lows below here, and this would be my end target for price if we're to trade on lower. So let's go to the 4 hour real quick, and you'll see that, to be honest, this is quite nice price action, nice consolidation, high. This is the breaker I was talking about, high, low, higher high. So again, if price retraces, or when price retraces into this range, what we're looking for, shorting opportunities to then run us into the sell stops below here and here. It seems very simple. I'm not saying it is at all, but generally that's how I'm looking at price, and that's how I want it to deliver. So that's pretty much everything on pound. But overall, remember, if we want to see a down close week, then we'll probably get like a retracement maybe Tuesday, Wednesday, and then continuation on Thursday into Friday. But I think with weeks like this, especially the Monday straight after non-farm payroll, we just have to let it trade, and then we'll have a much clearer view. Now, I say that every week, but specifically non-farm payroll, let's let the Monday get out the way, then we can start to delve a bit deeper. So, but those are my targets generally. Look, obviously there's that 25% level I was talking about. This is why it's relevant, because you see how it lines up with the 4 hour breaker I was talking about, breaker range I was talking about. This is now more significant than that 50% level. So I'm not as concerned about that as providing resistance anymore. I'm now more concerned about the 25% level. So let's keep a close eye on that moving into Monday. And yeah. So now let's finish up on Euro USD. You can see that Euro's is a lot more weaker. Seems a lot more weaker. Let's go to the monthly. And you'll see how we're already trading into that bullish order block. So we're digging deep. So in terms of targets, it's not really ideal, to be honest. Obviously there's the midpoint, but I think that's likely now going to get disrespected, so I don't really want to think about that. We do have a rejection block level right here, so we'll get monthly rejection block marked out. And then yeah, let's pretty much just go to the weekly, because there's not much here for us. So we have another breaker, high, low, higher high. So I'm looking at this range again. Now this is a large range, but what's significant about this is the midpoint of it, because it's a long wick. So we can look at that midpoint as potential shorting opportunities. So assuming that dollar wants to trade on higher. So let's dash this out, and we'll put weekly consequent encroachment, and this is also an implied fair value gap. Now I'm not going to bother draw out the implied fair value gap as well, because the consequent encroachment's enough, but you can see how these PD arrays are layering each other, and this is why I'm paying attention to them. So just thought I'd point that out. But in terms of sell side targets on the weekly, well, obviously we have this low and this low. I'm looking at this low because it's a down close, so let's get this low marked out as a weekly sell side liquidity. And then is this today? Yeah, this is today already, so I'm not really too concerned. But generally speaking, I'll be looking at this consequent encroachment, and when we don't drop down to the low time frames, hopefully we'll find some PD arrays that align with that to help us with our narrative of expecting a run lower. So let's go to the daily, and you'll see how we're just taking out this low. There's that consequent encroachment, also lined up with the breaker, last down close before the up move, high, low, higher high. So again, if we trade, as we trade into this candle right here, very big candle, but if we retrace back into that, it should provide resistance to send us into our south side target right here. Now, why am I looking at this level? Well, one, it's relatively cool lows on the daily. Daily lows are significant. It's a nice big weekly low because it's down below a down close candle. And there's a whole consolidation right here. So price should come down here and be like, this is tough to get through. But you can see we're having a pretty smooth time displacing to the downside for now. So let's quickly drop down to the 4 hour. This is going to be the last time frame. Crazy day for euro, as you can see. Here's another breaker, kind of. But generally speaking, if we do get any high made, maybe in London. Now, the thing is, if euro's weaker than pound, like significantly weaker, you'll find it will struggle. So euro might not be able to make it up to its consequent encroachment. Euro might not be able to get all the way up there because it's too weak. Don't get me wrong, pound may, but euro might not. So when we take that into consideration, when you think, okay, what could it trade to? Well, technically, the breaker is this candle, the last down close candle before the up move, because we've got a high, a low, a high, and then we have this displacement, right? So if we just draw out this last down close candle, I'm going to be paying very close attention to how price treats this. And if we turn around in that, voila, we have a beautiful sell-off into our sell side targets below here. Maybe let off some at the fair value gap as partials. But let's just quickly take a look at the hourly. Not very cute, is it? But again, we still have the whole day, obviously, so we might see London create a classic high of the day in here, bearish order block, key off of that, and trade on lower. So that's how I'm looking at price right now in euro. Hope that all makes sense. But yeah, that's going to be everything, guys. If you have any questions, do join the Discord. Definitely join the mailing list. The link is in the description. I'll be back tomorrow, obviously, and right up until Thursday. Smash the like button, smash the subscribe button, drop a comment, and yeah, I'll catch you in the next one. Peace.